right, good afternoon, and a happy Tuesday. Welcome back on this rainy afternoon in sunny California, you guys. Elaine Proby here, CEO of PROBY'S Tax and Accounting and Tips from Elaine's Desk. So today we're going to have a beautiful conversation on giving, and everyone is going to be excited about this because in all of us, there's some philanthropists in all of us because we do a lot of giving and we do a lot of participating and we do a lot of helping. So this is going to be really great, guys. Hit like and share on this video. Hi, Joan. Good afternoon. Good afternoon. All right. So I hope you have good weather in your neck of the woods. All right, you guys. So we're going to talk about the tax efficiency and what philanthropic giving is about and businesses who participate in this type of giving. And so that's what we're going to talk about today. So the first point I want to make, we're going to jump right into this. The first point about this topic today is, what is a philanthropy, right? We hear this all the time when we hear about people who are called philanthropists. A lot of the folks with lots of money, generally they refer to all those folks as philanthropists because they do a lot of giving. And so what it is basically is a person or a company and who donates monies, time, experience, skills, right? You don't have to all have money for this. If you donate a lot of time, you can donate experiences, skill sets, a lot of stuff to create a better world, to create a better community, to help people in the long term. This is what it's all about. Anybody can be a philanthropy. Anybody, you don't have to be rich to do this. You don't have to have a lot of money to do this. As long as you donate a lot of time to really help to better the community and better society, you are a philanthropy, right? And so we always think about this as the people who have a lot of money. Well, they do a lot of giving. They usually give large sums of money. They do certain things like maybe building university, building schools, building libraries, giving out scholarships. So they do it on a large scale. But the people who doesn't have that kind of money, who donates their time as well, is also a philanthropist. Okay, so this is what we want to talk about today. And so the idea of philanthropy versus just having a nonprofit organization. A philanthropy organization is more like a public benefit organization, guys, or an association set up totally different simply because they're there for the long term. Now, a lot of times when we give to charitable donation, we give a charitable donation to a certain charity, they're usually doing a specific thing, right? They're helping the need as it arises on the spot. Contribution that they're doing, helping people as they go along a lot of times. So they're usually operating on a day-to-day basis for those reasons. So the philanthropist organization, they're more for the long haul. They're more for the long term. They're more for the huge participation in terms of creating a society of people and helping out in the long run in a large way. Okay, so they're both doing the same type of giving and helping. But the philanthropist organization of associations, they usually look at stuff in a larger scale for the long haul, right? So they want to set things up so it will be there forever. Like if they build a library, or build a university, or set up a school. So they're looking at stuff in a long haul in a large way that will help the community, over a period of years. That's what that is. Okay, so again, philanthropy. This is what we're talking about, the tax efficiency, the effect of businesses, and a lot of businesses who participate in contributing to these organizations or these foundations. This is what we're talking about today, guys. Hit like and share on this video. Learner Smith, thanks for jumping in. Thank you for the hearts. Hit like and share on this video. So we're going to find out why some companies do this giving back and what type of tax benefits they get from doing this, all right? So tax efficiency for philanthropy businesses that gives to the community, give to the world, give to society, and for the long haul is what we're discussing today. Okay, so let's jump right into the second point. So now we want to know, what is the reason why a lot of corporations give back to the community, right? As they should. The community builds them, so they should give back to the community. But a lot of companies, they make it a point to give back to the community. So what they do is they set up these corporate social responsibility programs within their company so that they can provide funds to different type of philanthropist organization that's doing large stuff in the community. Now, businesses do this one because it helps them to increase their brand in the community. It put a stamp on there, let people know who they are. It's very positive for them. Again, it shows that they care about the people in the community who cares about and support their business. This is why business do it. And they also encourage their employees to participate in this type of giving as well, right? So what happens now, because the company can benefit out of giving to these philanthropic organizations, all these foundations, because the company benefits, what they do is they encourage the employees to participate. They can do gift matching. Let's say you have an employee who wants to give to a certain foundation. The company will then do a gift match, so they'll, get involved. And so everyone gives, and so it helps the community. The people in the community, they support your business more when they see that you're giving back. You're not just taking and taking and taking, right? No one likes a person that just takes. They love when you get, your business is successful and you give back to the community. So this is great. So you encourage your employees to participate, and it does work well. The employees feels better because now they can come to the job and say, hey, I have this organization that I'm doing, helping out as a philanthropist. Some of them donate their time as well. Some of them put money in. If the company participate, they match those givings as well. It makes for a happy employee, a better company. And then who benefits? The community benefits on a whole. This is the whole idea. This is what we want to do. Okay, so this is why the companies give back to the community, guys. That's the main reason why they do this, so that they could provide positive social value to the people in the community. And overall, if everyone is doing this in different places, then of course it'll make everyone in the world benefits from these givings. Okay, so that's what we're talking about today. Say, hey, Karen, thanks for jumping in. Rod Smith, thank you for jumping on here. Who else is on here? Cognac Marcelina, hi, Mom. Hey, daughter, how are you? Yes. Irene, I love you, hon. I love you too. Thanks for jumping in. Welcome. You guys hit like and share on this video. We're talking about tax efficiency and philanthropic giving, and we want to make sure that everyone understands that not just the people with a lot of money can be a philanthropy. Anyone donates time, all their efforts, their skills to help the community is also a philanthropist, right? So let's talk about the tax benefits, which is usually the bottom line, the end result, right? So it's like anything else. A lot of people give to charity. And even when I'm doing taxes and someone said, well, I gave so much to charity, I gave so much to my church, and I can't remember what it is. And they were like, well, don't worry about it because, it doesn't really matter. They're thinking that because they gave it to assist and they gave it as a donation, they don't need to write it off. But I always say to them, the tax benefits allows you to pay less taxes when you deduct that benefit. So it gives you a little bit more money to give again, right? Look at it this way. Look at it as though I'm going to write this off, so I'm going to get more money back so I can give again. If you don't write it off, you don't reduce your tax liability, and then you're just always out of pocket. So get that money back, write off those deductions. Tax benefits is getting the deductions, lowering your tax liability, pay less taxes in, and use that money again to start giving again, okay? So you can make more contributions, all right? So I hope you guys get that. So some people don't want to write it off because they gave it to church. They feel good about giving it. However, you can write it off, get the tax benefits, get more money back on the refund, and give again so you can help again. This is a tax benefit, right? So most individuals can write off up to 60% of their adjusted gross income. So why not take that deduction, get that money back, and recycle it so you can donate it again, right? Businesses, if you are operating a business and you donate to one of these philanthropy organization or foundation so that they can help the community, you can write off up to 10% of your gross revenue. So if the business make $1 million, they could write off 10% of that. So that gives them a deduction, less taxes they pay, more money they can again recycle and keep giving. So the government put this incentive in there. They want you to continue to give. So they give you all these incentives, all these credits so that you can hold on to some more money and just recycle that money and give it again. Okay, so that's the reason why a lot of companies do give, because there's a benefit and they can just recycle those dollars instead of paying taxes. They can help the community with those dollars. All right. Glenn Sampson, knowledge. Thanks for jumping in. All right, guys, so let me recap this. We're talking about tax efficiency. We're talking about philanthropists, right? We hear this all the time when we think of all the very rich folks who have these major foundations. However, anyone can be a philanthropy because all you got to do is put in time, put in your skills, donate your experience. All this helps. They can put money, you can put the time, you can put the skills, and you can help. So that's what it is. And it is for the greater good of the community and the world, essentially. People with money donate a lot of money. They do major stuff like building schools, universities, libraries, give scholarships. They do a lot of huge stuff with that money. But again, you can participate by putting your time in and help out, right? So that the world, the community can really benefit. Second point is giving back. Why do companies and people give back? Well, simply, especially for businesses, it helps their brand. It makes them look very positive in the community. They're not just taking, they're also giving. People love to support a business that gives, right? You can't just take, you have to give as well. You encourage your employees to participate. If they're giving a donation as a business, you can match that donation. There's more money out there to help the community, okay? This is what we want to do, help others to make the community a better and more positive social value and make it work better for everyone in the community, okay? This helps you as an individual and it helps your business to grow, okay? So, third point, credits and deductions. Why do we do this? The government encourages it. They give you a tax deduction, so you can pay less taxes and have more money to give. They give you credits as an incentive. They want you to continue to give, okay? So let's take advantage of that. We're helping everyone else. We're helping the community. We're helping everybody that supports our business as well. Then we, get a tax benefit for it. Take that money, recycle it, and help again, all right? So that's my point today, all right? So let's go back to the reason why we're also talking about a lot of taxes at this point, because it is tax season. We want to make sure that you guys are on top of your taxes so that you can, if you got some refund coming, get that money back so you can have it in your pocket for yourself or to help someone else. So if you guys have not done your taxes yet, make sure that you go to PROBY'S.com. And you don't have to leave your house. There's not a radar, whatever it is. If you're very busy, you go to PROBY'S.com. We have a secure website. You can just upload all your documents there. You don't have to do anything. Everything is done automatically. At that point, you can have everything e-signed, direct deposit, electronic payment, all of that good stuff. You don't have to leave. We make it easy for you guys. If you have any questions, give us a call at 323-290-9034. If you need any further consultation, book yourself a 15-minute free with me. I'll be happy to talk to you guys about it, okay? So let's not do it because, we're too busy. We take care of it even if you're extremely busy. Learning says facts. I'm getting smarter. Glenn Sampson say knowledge. All right. So he said, I'm getting smarter. That's right. And then guess what? We are having, I'm getting smart. We're having the workshop, right? The workshop. We're having a workshop. The webinar, we're going to have that on March the 7th. Okay, this is going to be great. Again, we talked about this. So many people can start a business, but not everyone can stay in business. We want to give you some good tips and points on how you can stay in business. We're going to show you how to do that. This is going to be a great workshop, you guys. So stay tuned. Go to elainesdesk.com for that information. This is going to be beautiful. And you guys are going to learn how to stay in business. PROBY'S been in business 40 years this year. So, we can shed some insight on how to stay in business. All right. So with that said, I think we got it covered. Thursday we'll be back. And what are we talking about on Thursday? Let's see. Thursday, you guys, we will be back here at 1 p.m. She said we will be talking about 3 tips to strategic tax planning. Okay. So we talk about strategic tax planning. The whole idea is we want to make sure you don't pay any more taxes than you have to. This whole thing is make the money and pay as little taxes and hold on to it. So we're going to talk about how you do that on Thursday. All right. So Joan says, thank you very much. Have a great evening. All right, guys. So I think that brings us to the end of today's conversation. Hit like and share on this video. Make sure everyone gets this information. You guys stay tuned. I'll see you guys back here on Thursday afternoon. And with that said, you guys take care of each other and take care of yourself. Thanks for watching.